Okay, so what if a massive, truly seismic shift is happening in the financial world right under our noses? We're talking about something called the Great Rotation of Capital. Think of it like a tidal wave of money, pulling out of digital assets and just crashing into hard money. Now, according to the source material we're digging into, this isn't just another market trend. It's a sign that the fundamental rules of the game are changing right before our eyes.
So how are we going to unpack this whole story? Well, here's the plan. First, we'll look at what's being called the digital obliteration. That's the crypto collapse that really kicked this all off. Then, we're going to get into the why of it all, the end of free money. From there, it gets really interesting. We'll see a tale of two completely opposite markets. We'll follow the money as it makes a flight to safety. And finally, we'll put all the pieces together to really understand this great rotation thesis.
All right, so our story really starts with the event that lit the fuse. We're talking about the sudden, the shocking, and frankly, the violent collapse of Bitcoin.
And just look at the language the source uses here. Obliterated. I mean, that's not a correction or a pullback, right? That is the language of pure panic. It signals something much bigger than just a bad day for traders. It suggests a deep structural break in the market.
So what does obliterated actually look like in numbers? Well, it looks like a staggering 6.6% drop. But here's the kicker. The real story is the speed. This happened in less than 2 hours. That's not a slow leak, you know? That is a catastrophic failure. It's what traders call a waterfall event, where all the buyers just vanish, and the price falls off a cliff. And the scale of the damage, it's just mind-boggling. In those 2 hours, $127 billion in market value was just wiped out. To give you some perspective, that's like the entire value of a company like Starbucks just vanishing into thin air. You know, that kind of speed is absolutely devastating for anyone using leverage. In one brutal move, $400 million in bets that the price would go up were instantly liquidated. And this creates a vicious cycle, right? The forced selling pushes the price down, which then triggers even more forced selling. And here's the bottom line. After a year of incredible gains and all the hype, this one single event was so powerful it erased everything. Just like that, Bitcoin was pushed into the red for 2025. A total and shocking reversal of fortune.
But here's the thing. An implosion like this doesn't just happen in a vacuum. To get the real story, we have to zoom out and look at the bigger picture, the entire macroeconomic environment. You know, the soil where all these assets grow, it's fundamentally changed.
See, for years, the world was basically awash in what was free money. It was because of negative real interest rates. All that really means is that holding cash was a losing game. It forced investors into riskier, more speculative assets like crypto just to find a halfway decent return. This was the fuel that inflated what a lot of people call the everything bubble, where stocks, housing, crypto, you name it, all soared together.
But that world, it's gone now. According to the source, 3 things happened that basically flipped the switch. First, Japan's bond yield spiked. Now this blew up something called the yen carry trade, a fancy way of saying investors were borrowing super cheap money from Japan to invest everywhere else. Suddenly, that cheap money wasn't so cheap. At the exact same time, any hope for rate cuts from the US Fed just collapsed. And all of this led to the final nail in the coffin. For the first time in years, real interest rates turned positive.
And this just says it all, doesn't it? The free money spigot has been turned off. Those global trades that fueled all the speculation are now violently unwinding. For the first time in a very long time, you don't actually get punished for holding cash. The rules of the game have completely, and I mean completely, changed.
Now, here's where it gets wild. While all this chaos was blowing up the crypto market, a completely different story was playing out somewhere else. And it's not just a different story, it's a perfect mirror image of what was happening.
I mean, just look at this scoreboard for 2025. This is the market speaking loud and clear. While Bitcoin is negative for the year, silver is up an incredible 89%, ripping to new all-time highs, and gold is right there with it, up a whopping 61%. You just couldn't ask for a clearer divergence.
And what this does is reveal the true character of these assets. You know, for years, the sales pitch for Bitcoin was that it's digital gold. But when it was actually tested by a crisis, it behaved completely differently. It acted like a leveraged tech stock, highly volatile and moving with the market's riskiest bets. Meanwhile, gold and silver did what they've always done. They acted like true safe havens, a stable store of value.
And the raw data just confirms this story. We see a net $3.5 billion fleeing Bitcoin ETFs in just 1 month. We see the entire system is choked with leverage, margin debt at an all-time high, and maybe the most telling piece of evidence of all, its correlation to the tech-heavy Nasdaq is 0.72. That's incredibly high. It shows it trades way more like a tech stock than a safe haven.
So, if you have this absolute torrent of money rushing out of over-leveraged, risky assets, well, it has to go somewhere, right? Money never just disappears. It just finds a new home. So the multi-trillion-dollar question is, where is it going?
Okay, so let's think through the options. Capital isn't fleeing to cash because inflation is still a huge problem, eating it away. It's definitely not going into bonds, they're getting hammered by those same rising yields, and it's not hiding in the broader stock market, which is also falling as all this liquidity dries up. So where does that leave us?
The market itself is giving us the answer loud and clear. The thesis argues that capital is flowing into the only assets with zero counterparty risk. That just means you aren't relying on someone else to make good on a promise. These are assets that have proven their worth for thousands of years, especially when monetary systems are in flux. Physical gold and silver.
And if you want the single most explosive proof of this rotation, the source points directly to silver. The fundamentals here are just incredibly tight. There's a massive structural gap between supply and demand, and the stockpiles held on exchanges are at critically low levels. And when you have that much demand chasing so little supply, the price is forced upwards to find a new equilibrium. It enters what's called price discovery mode.
Okay, let's pull all of these threads together into one final, hard-hitting thesis. What the source is arguing here is that what we're witnessing isn't just some random market event. It's the dawn of an entirely new monetary era.
This really boils the entire argument down. First, you have rising real rates, which just destroys the whole reason to hold speculative assets. Second, the carry trades that provided all the fuel for the bubble, they're blowing up. Third, in response, capital is stampeding towards the safety of hard money. And fourth, and this is maybe the most important part, the era of the infinite on-ramp, of endless printed money flowing into the system is over.
So, what's the ultimate takeaway from all this source material? It's really simple. This isn't a forecast, it isn't an opinion. The argument is that this is what the market, the charts, the price action, all of it, is telling us right now. The rotation isn't coming anymore. It's here. So, we've walked through a really powerful thesis, tracing this dramatic flow of capital from digital speculation all the way to physical safety. And it leaves us with one final, pretty provocative question. Is this it? Are we watching the very beginning of the great everything bubble unwind?